Hey folks, hope everyone had a happy holiday and Merry Christmas. No recap for me today. I'm just going to talk about something that's really dear to me, a topic that I think is overlooked in trading altogether, trade management. Often a lot of traders are focused on the strategies, the patterns, the indicators, all this stuff, right? But no one talks about trade management in detail. Or if they do, they'll give you one method and say, okay, use this, use that. In my opinion, this is the make or break thing, right? People will eventually learn their strategies, they'll eventually get accurate on them to some extent, but they're not unable to capitalize on their winners, right? Their winners just, they don't count enough, they're not big enough. And I've seen this over and over again. People have come to me and said, hey Robert, I'm 60% accurate, I'm 65% accurate, I'm losing money. I'm like, well, how is that possible? Show me your journal. So they show me their journal, they show me their winners and their losers, and their losers are on average, if we standardize to the risk multiples, is a little bit over 1R, slippage and some bad trades or whatever it may be. And then you look at their winners and it's like, okay, well, here's an example, right? So you go long here, you put your stop here. Starts going your way, you start parsing. You get to here, that's 1-to-1. You have 20% of your shares left, and then you're all out. Maybe you hold the last bit to here or whatever the case, right? You look at it, you tally it up, it's like, okay, that's 0.8 Rs. Your losers are -1R. You need to be more than whatever the math is here, right? You have to be highly accurate to be making money if that's your ratio. So a lot of traders, they will snipe, they'll get the good entry, and then they'll just start unloading shares immediately. They'll run out of shares before they even get to 1R, let alone 2R. And we already know, 2-to-1 with a 40-50% accuracy, it's a sweet spot. There's actually some calculations behind this, the Sharpe ratio, right? What is your accuracy, your batting average, versus what your payout ratio, how big your winners are compared to your losers? And are your winners big enough to pay for your losers given your accuracy? And that's the topic for another day. But basically, traders, there's an old adage, right, in trading, it says, we eat like a bird and shit like an elephant. And unfortunately, that's the exact opposite we need to be, right? Our winners are coming out tiny, or maybe the size of our losers, or sometimes our losers are coming out massive if you're not using stops or whatever the case. But this really comes down to how much are you willing to give back, right? There's so many different ways to manage trades, guys. And I'm not here to tell you which one works better because, it comes down to the pattern. I tweeted about this a few weeks ago. I don't think I got the point across, but basically, don't mistake a scalpel with a sword. They both do the job, right? They both meant to cut. But if your job is to get in and out really fast, then you need to scale out a certain way. If your job is to hold for longer term moves, then you need to be trading, you need to be trading patterns that have the capacity to run, right? Based off your patterns, your setups, and you need to be hold to those targets. So again, this comes back to how much you're willing to give back, right? The market never goes up and then it just comes right back down like this, right? If it is, then you're most likely stuck in chop, right? The market will move in fractals, right? And it'll pull back along the way. It doesn't go up in a straight line or come down in a straight line. So if you believe in the fractal movement of the markets, right, of this kind of wave pattern, then you have to agree on some of these facts here that I'm about to present, right? In order to make a pullback, you have to make at least a new 1-minute low, right? So you come up here, some candles, right? You have to make a new 1-minute low. This line needs to be breached, right? The current candle needs to break the low of the prior, right? That's fact. It's kind of like, in order to go 60 miles an hour, you have to breach 50 miles an hour, right? That's an objective statement. And the same can be said on 5-minute charts, 15-minute charts, whatever the case, right? The new low must be made in order for it to be official pullback. So I don't think anyone can argue with that. Now the question is, how much are you willing to give back, right? Are you willing to manage bar by bar, right? This is what we call a bar by bar. 1-minute chart, 2-minute chart, 5-minute chart. There's even people doing it on 15-minute charts, right? And then if you follow it tightly, then you're not willing to give much back. It's a trade-off, basically, right? How much unrealized P&L are you willing to sacrifice, or to secure? Sorry, you need to secure this unrealized P&L, but in return, you're going to forego potential profits in the future, right? It's a trade-off there. Or the other way around, are you willing to let your unrealized P&L, are you willing to risk that in order to get a higher potential profit in the future, right? You're willing to give some back, survive through bigger pullbacks and so forth, right? So we have the bar by bar. There's a bunch of these. I'll go over of them in a second. But basically what I'm seeing out here, guys, and I used to be victim to this myself. I was coming out with, my average winner was 1.4 Rs, and I thought I was holding. I thought I was being patient. And reviewing my journals, like, well, I need to be goddamn more accurate than if I want to be surviving in this game, right? So I started reviewing different trade management styles. I started exploring that, see what other people were doing, what other traders were doing, trying it for myself, back testing it, running scenarios, for my past 50 trades, what would my total R be if I had done it this way or that way or this way, right? And again, you need a large sample size for this stuff to prove true. I'll get into those examples later, right? When I was doing 2R all or nothing, you can't just let this use this in 5 trades and say, oh, that's not working for me, whatever. You need a large sample size, because sometimes you'll get the 1Rs, right? You'll get the 1Rs. It'll come to 1.9R, and then you'll give it all back, and you'll end up losing a full loss, right? But other times, it'll hit 2Rs, 2Rs, 1R along the way, and then at the very end of the sample size, when you can see, okay, well, yeah, well, the 2R all or nothing's obviously beating this, right? Just the losers, your mind pays more attention to it, right? It's a bias that your mind will pay attention. Oh, this stuff doesn't work. It's stupid. I'm going to give up. Anyways, I'm going off a tangent here. So basically, leaving money on the table is what I'm seeing, right? People are scaling out really, really quickly, which is what I used to do, and then they look back on the chart in retrospect, in hindsight, say, oh, I left so much on the table. I was like, well, no offense, what you don't know the future. I don't know the future, right? So what system did you have in place? What rule did you have in place to allow you to stay in the move long enough, right? What objective, measurable guideline do you have, right? Some that says, okay, don't do this, don't get out unless this happens. Most likely not, and that's why you're saying you left money on the table. So you can't be saying that if you don't have a way to stay in the move, right? If you're going to survive bar by bar, or you're going to survive through pivots, or you're going to survive through a larger time frame, 15-minute lows, whatever the case, right? All these different ways. So basically, the options I'll go over these high level. Right? We have the AON, all or nothing, and there's different variations of this, right? So say this is the pattern, right? You go long here, and you put your stop here, all or nothing. So you want 2R, all or nothing, right? You leave your stop, and if it hits 2R, you take the profit. You leave it alone until one of those two happens, right? Whether your exit or your stop hits, and then you just let it be. Now there's variations of this. You can go after 1R, maybe take off a quarter. A lot of people like to take off a little bit because they get antsy. They feel nervous. They feel the market's just going to flip on them and go 180 on one bar, and that's that's normal, right? To be afraid when you have the unrealized P&L growing or whatever, right? And especially if you have it on your screen. Personally, I hide my unrealized P&L. I never know how much I'm up or down in a position. Either way, so you 1R, take off a quarter. Or some people, they say, okay, that's not far enough. How about 1.5R? I won't take off a quarter, but I'll move my stop to break even. That way, right? If it comes up to a certain distance and starts come crashing back, I refuse to take a loss on that, right? I will just get out at break even. And this, 3R, move stop to 2R, maybe take off a half after 2R, trail it by a half an hour. You can get, it's endless, the amount of combinations you can do, right? We can go. There's people out there doing 3R, all or nothing, right? People who trade longer time frames, trend trades, whatever the case. They get in on the gap and go, and they set their stop at the low of the day or the high of the day, and just let it ride, right? So that's one. And then the other is, it's a fixed cent. I used to trade off the fixed cent. So I'll take a bit off after, is a gut feel type of thing. I'll take off after 15 cents on a $20 stock, and maybe 30 cents on a $40 stock. I'll just start partialing it there, and just time it. And when my finger gets itchy, I'll press the hotkey or whatever. If the candle starts slowing down, I'll start pressing it faster. It's just very subjective, very intuitive, and that works for some people, right? I'm not saying there's anything wrong with that. If that works for you and you're highly profitable, you have no reason to improve on how to take profit, then you feel free to turn off the video. You won't gain anything from this. Another method is to sell into strength, right? When the move starts getting bigger and bigger, parabolic, you start scaling out faster and faster because you're selling into strength, and once something gets a certain distance, you're expecting it to come back hard, right? Or cover into weakness is the opposite, right? Bar by bar, we'll get into in a minute. And then there's pivot and trend analysis. This is probably the slower paced move, right? Is that if you believe that you're going to be in a trend, an all-day trend, based on whatever analysis you've done, higher time frames, you are willing to survive some pretty major drawdowns. Sometimes that will bring you underwater, right? In the position, you'll be red, but then if you believe in the pivot and the minor support and all that other stuff, then you're willing to hold for that, right? And then there's 15-minute bar by bars. We'll talk that's just another iteration of bar by bar. Or there's just straight hold to target, right? And then we'll see that. Sometimes the daily chart is just so damn clear, like we saw on one of the examples here, Amazon today, that you just hold to target. And then whatever happens along the way, whatever it may be, you feel that that's probably going to be the move today, right? Based on your bias, whatever you've done, analysis you've done. All right, so let's take a look at some examples here. Let's take a look at MBOT from 2 days ago, I think, Christmas Eve. This was a runner, right? It's a big runner. Some people played it off an orb. So let's take a look. If you did a 1 minute, 2 minute orb. I have my 2 minute chart, but it doesn't matter what the candlestick is. Just know that the lower the candlestick, right, the faster you'll have to exit the trade, right? That's just the way these things go. So say we entered here. Let's go 2 minute bar by bar. I'm not exiting here. I'm not exiting here. I'm not exiting here. No, And this is an almost, right? So I actually have a rule if I use this method for my momentum play. I use a rule that when it makes the new low or it gets near, I count to 3. Because sometimes you'll just get a wick and it'll come right back up, right? 3 seconds is nothing in the market, guys. 1, 2, 3. That, the world's not coming to an end when the candle flashes through, right? So say you're still in it, here, and let's just say this one was real. Okay, so you're in the move from here to here. Okay, look at that, guys. Look at that. If you just held till here, obviously this is hindsight 2020, right? But a lot of people I'm seeing are partial, and they're out of the move. Out of the move. Remember what I said. You have to break the new low before the pullback is happening, right? So there you go. You're at this point, and I'm not saying you can partial along the way, right? But hold, and don't exit completely. Now here's another one. MBOT. Or sorry, this is the same one. 5-minute bar. So you're long here. Where do we hit the new low? No. Here. Is that just a coincidence that the bar is this big? No, because there's a lot of people using bar. Once it breaks, everyone flushes out, right? That's usually when you start getting a pullback, a retracement. So this brought you up to this level. Look at that, 19. This one's 16. Okay, so let's take a look at QGen from today. This is another example. So QGen was the big gap down, but it put in some strength at the open. It was a nice buy setup right at the some sort of level I had here. Okay, so say you're long here. Well, let's just move forward a bit here. Say you are long here, and you put your stop here. That's a valid play, right? This is your stop distance. Let's go bar by bar on the 5-minute chart, right? This is a more of a trend trade. No. Here, big flush, right? And that's bar by bar. But here, if you were willing to survive a pivot, then you're fine, right? Because you know it's going to pivot. And I think it went off to like 33.50 or whatever the case, right? So bar by bar would have brought you up to here. Guys, bar by bar will probably beat, I'm not saying all of you guys out there, but 90%. It'll beat 90% of all the custom systematic rules that people have, trailing stop by dollars and moving average cross and all this other stuff. Bar by bar will probably beat 90% of it out there. And I firmly believe that. I challenge anyone, if you are willing to follow the bar by bar for a certain number of trades, 20, 25 trades, report back to me. Let me know, how did it work out? Reduce your size, whatever, right? How did it work out for you? How much more profitable were your winners compared to your losers using this method? Let's take a look at Amazon. So Amazon today was a big runner, right? Amazon. Actually, let's look at the daily. So here's an example of some other. Okay, so Amazon broke out today, right? Broke out on the power move. Obviously, this is your first target, and then we're probably coming back to this pivot here, right? So this is an example of holding to target, 1823, 1850. I don't know it's going to go that far. Do you know it's going to go that far? It could have hit to 1823 and came back, right? But at least when you start gap up and you blast off at this point, this is your first target, okay? So come back. Where did we end up consolidating? Your first target, 1823, right? Where did we reject? 1850, that other pivot, right? If you trust in your levels and your ability to draw the levels, you can hold a target. That's another method. But let's just take a look at bar by bar. Here's your breakout. No. Here. Right there. And what does that actually form? It just forms a base breakout. But here, that simple system brought you here. $18 move on a $180 stock. Right? It's 1% move. But if your stop is below the VWAP or below the low of the day, that's a pretty handsome gain, right? So there you have it, bar by bar, guys. Some people actually have a variation of that. Say, okay, I will wait for 1 bar in my direction, then I'll do bar by bar. Or I'll do 2 bars in my direction, then I'll do bar by bar. Because sometimes you might not get the clean move, right? Sometimes you get this, and then you get the pivot back, and then you get the move up. Right, so variations of that, but I'm telling you, at least on a 5-minute chart, trading the open, bar by bar is pretty damn good. Sometimes the 2-minute variation, right? If it's too close to the open, you won't survive these. These will come back on you, right? You won't survive these pullbacks. But the five, like I'm saying, guys, if you can, sometimes you'll get stopped out. Sometimes it'll come back and you just miss the move altogether. But you're willing to sacrifice. It comes back again. How much unrealized profit do you want to secure in order to miss out on future gains? And if you have a simple mechanical system, all or nothing, variations of it, bar by bar, pivot, trend analysis, hold the target, whatever the case. If you have an objective measure, or you could even split it by strategy, right? So my strategies are the open strategy A's, B, and C. I will use this type of trade management. And then after 10 o'clock, I will switch to strategy D and E, where I'll use this type of management, right? It doesn't have to be universal. You don't have to be all, but I'm just saying the more variables and the more decisions, you're just going to complicate it for yourself. right? So when I was doing 2R all or nothing, like earlier this year, it was actually pretty damn good, right? It took a while to get used to. It's like, you know, watching things come back to your entry, putting you underwater for a bit, and then shooting off. Sometimes you get to 1.95R, get skipped by a penny or two, come back and take a full loss, right? It takes a lot of fortitude to survive this stuff. So lately, because I'm moving more and more towards a different style of trading, I've scratched 2R all or nothing. I am going to pivot base, right? Pivot base. And that's how I'm able to catch some of these large winners, 6, 7, 8Rs, 10Rs, whatever the case. My losers are always going to be 1R, if not less. And I let the math take care of itself, guys. So that's a long video. It's a long rant. Not sure how long this is, but back test it for yourself, right? Back test it for yourself. Say on this play, this one play, build a spreadsheet, right? All these different methods, A, B, C, D. Where would I have, if I had followed the rules for A, where would I have exited and how much would I have made? You know, 0.7 Rs. This method, 1.5 Rs. This method, 6 Rs, this whatever, right? Do that for a series of trades you guys took, right? Remember, sample size, large sample size. I sound like a broken record here, but this type of analysis is often overlooked in trading. People will give you a one-size-fits-all. Oh, just get out when, you know, the momentum slows. Get out when this happens, this happens. It doesn't work that way because every strategy is different, right? You can't have universal trade management rules. And I remember a very seasoned veteran trader I saw on YouTube one time said that his career almost failed as a trader. It almost failed because he was not taught to manage. He was taught to manage a certain way that didn't fit the style he was trading. And once he was able to learn different ways to manage his trades, it just turned the world around. What do we say? It was a gorilla off his back, right? And then he started seeing the math working for itself. The system started working for itself. The winner started outweighing the losers based on his accuracy or whatever the case, right? So this is all I got to say, guys. Let your winners count. Please do not eat like a bird and shit like an elephant. It's got to be vice versa. And I'm really open to hear some comments. You can reach out to me on Twitter at Trader Robert H, or just comment down below. Let me know how it goes. And I'll talk to you guys in a bit. See ya.